Hello everyone, greetings to you. So I just want to make a quick video on how I take my trades, how I analyze the charts based on my own style of trading and perspective. So when you check my profile, you would have seen that most of my charts looks the same. The write-ups are usually the same. That's because I do basically just one style of trading. So I want to show you how I do it. Now, when I want to take a trade, the first thing I look at is the structure of the market, like where the structure is heading, whether it's bullish or whether it's bearish. Now, after I've checked um, the state of the market or the structure of the market, then I will look for my entry. That is where I want to take my trade from, where I want to put my stop loss and where I want to put my take profit. So I'll be analyzing this dot USDT. Now, looking at this dot USDT, if I want to take a trade on this, I'm seeing that the market is bullish. It is in a bullish trend. So why is this market bullish? It's bullish because the structure of the market is creating higher highs and higher lows. So this is what I mean by that. So the market goes higher high, higher low, then higher high, higher low, then higher high, higher low, then another higher high here, higher low, higher high. So since I've now established that my market is in a bullish trend, I just mark out my structure. The only reason why I'm labeling these structures is just to get clarity, Um it's just like mapping out my plan on how I want the market to go or how I'm expecting the market to go. So since I've seen that the market is bullish now, what am I going to do? I'm going to take a buy trade, right? So the next thing now is where am I going to take a buy trade? Right. So for me to do that, I want to mark out my structures. Now I mark out my most recent break of structure. I label my break of structure as B. B simply means break of structure. Different people use different terminology. Some people might call it break of structure. Some say break in market structure. Different names, but we know that we mean the same thing, right? So I'm going to label this as B. Then after I've looked for my break of structure, I still go ahead and look for the last break of structure before this recent one that I've marked. The reason why I'm doing that is because most times the market will use this most recent break of structure. The market will use this most recent structure as inducement. Inducement is a form of liquidity where the market taps into your entry and pretends like it's going your way, then it just comes back and hits your stop loss. Then finally continues going your way. You must have noticed that kind of thing. So let's assume that I want to take this trade now based on direct demand and supply trading. I'll put my entry here at this other block and my stop loss below this other block. Now you will have seen that normally I target 1:3 risk to reward, which means if I'm risking $1, I'm planning to make $3. And that is just to make me, we cannot be right all the time in the market. So this 1:3 risk to reward will give me an edge of winning, even though I might be wrong most of the time in the market. I'll still end up winning and having profitable trades because of my risk to reward. So let's assume I'm taking this trade and this direct demand. You would have seen that the market would have kicked me out and went my way a bit. So most times this immediate structure is being used as liquidity. So that's why I don't take my entry there. I mark it as X, which means inducement. Some people might mark it as anything that they want to mark it as. Some write it as liquidity, some write it as whatever, whatever. So just know that we're talking about the same thing. We're talking about inducement. It's still the same concept, just different terminology. So marking it as X now. So after this, I now look for the last structure before this structure that I marked here now. And what is the last structure here? This is it here. So I mark out this my last structure too, and I label it as B, which is also break a market structure. Now we know that a break in market structure signifies continuation of trend normally. So that's it. Now, as I've marked my structure out, I want to start looking for my entry below the inducement. Look at my inducement here. If you can see my mouse, this is my inducement. But I want to start looking for my entry from other blocks that are below this inducement. So I'm going to be choosing this particular other block. I'm going to be choosing this particular other block because it's at the extreme and it swept this previous other block beside it. So you get. So I'm going to mark it out from body to wick. From body to wick. The top of the body is going to be my entry, and then the last side of the wick is going to be my stop loss. So I'm going to put this on my position to my entry here at the top of my other block. Then most times I give a little more gap just because the markets might, come to take liquidity at this week here. So if I give a little more breathing space, I'll be on the safer side. That is just an extra thing I do for myself. So after I've put my stop loss here, I now drag my risk to reward to be 1:3. Now you know that risk to reward is dependent on the structure of the market. So as you are trading and you're putting your risk to reward, you also consider the structure of the market, consider reaction zones and all that. So the way I've marked out this trade now, this is .USDT Polkadot. I'm expecting the market now to dance down to this zone, hit my entry, and then move up. The market can move up to infinity, like to this level, but I'm just concerned about my trade targets. If the market decides, the markets will most likely clear this place because this place is a targeted structure. But I'm not really concerned about that because what I want is just to follow my trading plan and do my thing and get out of the market. So that's just it about this analysis. That is just how I do my analysis basically. It's nothing much. If there's anything you don't understand about what I just explained, you can put it in the comments. Or you can message me on TradingView. There's a message box there. And if there's any pair that you'd like me to analyze or any other thing you'd like me to explain, just still write it in the comments or message me. My social handles is all over here. So that's just it for it.